Ladies and gentlemen, good day and welcome to the Maan Aluminium Limited Q3 FY26 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jigar Jani from Nuvama Wealth. Thank you, and over to you, Mr. Jigar.
Yes, thanks, Swapnali, and thank you all for joining us today to discuss the Q3 FY26 earnings of Maan Aluminium Limited. We would like to thank the company for giving us the opportunity to host the call. On the call with us today, we have the management team of Maan Aluminium, represented by Mr. Ravindranath Jain, the Chairman and Managing Director, and Mr. Umesh Chandra Pant, the Chief Financial Officer. I would now like to hand over the call to the management team for their opening remarks, post which we can open the floor for Q&A. Over to you. Thank you.
Yeah, good afternoon, everyone, and thank you for joining us for our Q3 FY26 earnings call. My name is Umesh Pant, CFO of Maan Aluminium Limited. Joining me today is our Chairman, sir, who will be there shortly. We appreciate your continued interest and support. Let me begin first with the company overview, then a brief overview of our Q3 and 9 months FY26 performance, followed by our operational updates and our strategic outlook. Maan Aluminium Limited is one of India's established aluminium extrusion players with over 3 decades of operating history. The company is now undergoing a strategic transformation, moving from a largely commodity extrusion model to a technology-driven, high value-added aluminium converter. We basically operate across 2 business verticals. The first one is manufacturing of aluminium extrusion products, which will be our core focus going forward. The second vertical is our trading and distribution of primary aluminium, which is our legacy business, which is completely opportunity-driven. Our key capabilities include fully integrated operations where foundry, extrusion, anodizing, machining, and die shop are under one roof. We have expanded our extrusion capacity from 10,000 tons per metric annum to 24,000 MT. Our recently added advanced capabilities include 300 wide profile, 7 series alloy, which has near steel strength aluminium, precision machining, and automotive roof rail bending. We have a strong export presence with manufacturing revenues historically 60%, which were completely export driven. We have diversified end markets catering from automotive, defense, aerospace, solar, railway, architecture, electrical, and heavy engineering. The company is investing aggressively to reposition itself towards higher margin application specific products. So this was all about our company for the new investors who have recently joined us. Coming to the financial performance of Q3. During Q3, our revenue from operations stood at 152 crores, reflecting a 16% year-on decline, primarily due to lower trading volumes, which I have just explained that it is completely opportunity driven, and muted export demand during the quarter. EBITDA came in at 7 crores, showing a 16% year-on-year growth, supported by improved manufacturing mix and our cost optimization initiatives. Well, PAT stood at 3 crore, largely in line with last year, despite higher depreciation and finance costs from recently capacity additions. EBITDA margin for the quarter was approximately 5%, impacted by operating leverage and ongoing ramp-up costs at newly added facilities. Coming to 9 months FY26 performance highlights. For the 9 months ended December 25, revenue was 554 crores, marginally lower by 2% year-on-year basis. EBITDA increased by 19% year-on-year to 25 crores, reflecting better value-added contribution. PAT was almost stable at 11 crores. Investors, this clearly demonstrate that while top-line growth was moderated, profitability improved due to our strategic shift toward higher value-added manufacturing. Coming to business verticals, our manufacturing revenue grew 10% year-on-year in Q3 and almost 13% on a 9-month basis, driven by higher extrusion volumes and increased value-added sales. Trading revenue showed a decline around 32% year-on-year in Q3, which was a conscious strategic decision. As I just explained, that it is an opportunity-driven business, and we also move away from low-margin commodity trading business. Coming to operational and strategic updates, our transformational capex at Pithampur Unit 1 is now live. We have extrusion capacity expanded from 10,000 to 24,000 metric per annum. Latest capability upgraded to handle 300 profiles and 7 series alloy. This capability upgrade, enables our entry into defense, aerospace, automotive, and complex architectural applications. Well, the Italian extrusion press commissioned in March 25 is stabilizing, and we expect progressive utilization improvement over the coming quarters. Further, we acquired the Dewas facility in March 2025 via slump sale at 10.75 crores, where the plant modernization is underway. Our trial projections are started. Commercial commissioning is expected over the next 8 to 10 months. This unit particularly will focus on precision tubing and high-value downstream products, significantly strengthening our product portfolio. Towards the capex roadmap, basically over the next 3 years, we have planned a cumulative capex of approximately 190 plus crores, which we have a split between our further enhancement at Pithampur, where we have already acquired 2 acres of land, where we are planning our anodizing and powder coating segment. Dewas is already under expansion, and new machining, bending, tooling, and infrastructure will contribute another our capex plan. Basically, these investments are aimed at transitioning Maan Aluminium from a commodity extrusion player to a technology-driven, high-margin aluminum converter. Market outlook and strategy, basically looking ahead, we see strong opportunity in import substitution, particularly in defense and aerospace. Regarding the US tariffs, withdrawal of anti-dumping duties is yet not applicable to steel and aluminum. However, discussions are at an advanced stage, and we remain cautiously optimistic on a positive outcome. Our focus basically remains on increasing our value-added share, particularly in the domestic market, and improving our capacity utilization, strengthening our margins through precision machining and anodizing. While near-term challenges persist in the global demand, we remain confident that our expanded technical capabilities position us well for sustainable long-term growth. In this quarter, we deliberately strengthen our balance sheet this quarter through preference equity to support growth while maintaining financial discipline. Now, with capital now in place and major assets commissioned, the focus shifts fully to utilization, mix improvement, and operating leverage. While near-term performance reflects ramp-up cost, we are confident that our strategic investments will translate into stronger margins, improved ROC, and healthier cash flows over the medium term. So we thank you all investors, partners, and our employees for their continued trust and support. So now we'll open the floor for questions, please.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants, you are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and one to ask a question. We have the first question from the line of Jatin Damania from Swan Investments. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. So just wanted to understand that on the manufacturing business, you indicated that the volume and the revenue was driven by the higher volume by 10%. So can you help us understand what was the capacity utilization during the quarter, and how shall we see a ramp up of the newly expansion capacity from 10 to 24,000 over 9 to 12 months?
Can you repeat, please?
So I want to understand what was the capacity utilization during the quarter and the 9 months, and how one can assume a ramp up over the next 9 to 12 months?
It was almost 45% utilization, 25% utilization. So see, that capacity expansion that we have recently done, basically, it was almost 140% in one phase. So, that is, it typically takes 12 to 18 months to stabilize. So, there will be additional time for, complex profile customer approvals. So we are doing that basically. So we are already onboarding new customers in automotive, defense and infrastructure. So, we expect gradual sequential improvement from FY27 onwards rather than an overnight jump, basically.
So, okay. So Q3 basically it was a 45% on the consolidated capacity, which was 10,000.
25%.
25%. And sir,
Yes,
once we start our the Dewas plant with the anodizing and the new expansion that will kick in, how do we see our product mix changing, and what sorts of profitability one can assume with the anodizing and the Pithampur facility comes in?
See, definitely it will increase. So, our basically commodity extrusion, from commodity extrusion, we are expanding to a higher, high value aluminum solution. So Dewas unit, basically it is, modernization and refurbishment is underway, and trial runs have started beginning. So we expect commercial commissioning within the next 6 months. Initially, our Dewas unit basically will focus on precision tubing and downstream value-added products.
Right.
In terms of potential, I would guide that FY27 will be a partial contribution year basically. From FY28 onwards, Dewas can generate around 100 plus crores of annual revenue at optimal utilization. Basically, definitely you will see the margins higher than our legacy extrusion business. So Dewas will be our key profitability lever, basically not just a volume addition basically.
So sir, in terms of the margin, because last year, as you indicated, that Dewas will be a key profitability driven. So if you look that last year, we did near about almost $385-400 of EBITDA per ton. So with Dewas kicking in next 6 months, what sorts of EBITDA per ton one can work on, and with your anodizing facility also coming in, so there will be some cost saving there also. So once we ramp up to almost 80-85% utilization with an operating leverage, what will be EBITDA per ton one should assume on the overall business?
See, gradual improvements can be seen starting FY27. So normalized EBITDA margins around 8% over the medium term we can see. Basically, the key driver will be our operating leverage on fixed costs combined with our higher value-added share. Because as of now, our current margins, you will see these reflect 3 transitional factors basically. First of all, our underutilization of newly commissioned capacity, that Italian press at Pithampur, and our higher depreciation and finance costs post capex. So structurally, our margin profile is changing, but almost after FY27, we can see that EBITDA normalizing basically.
So during this quarter, what was the cost pertaining depreciation and the ramp-up cost pertaining to the new unit that we capitalized during the quarter?
See, for this particular quarter, basically, the depreciation was around 2 crores.
Okay. And expenses pertaining to the ramp-up to the new facility?
That, basically, I will get back to you.
Sure, sir. That's all from my side as of now. If there's any further question, I'll come back in a few. Thank you and all the best.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We have the next question from the line of Samir Shah from Nuvama Wealth. Please go ahead. Samir, please proceed with your question.
Hello, am I audible?
Yes, you're audible. Please proceed.
Yeah. Thank you for the opportunity. So my question was regarding the weak revenue performance, where tooling and manufacturing revenues both have fallen. So what can we expect in terms of revenue mix going ahead for the next 2-3 years?
See, again, I just explained that, basically, once we have make, substantial investments, we have keep the platform ready. So now, we are working towards, towards designing a product mix, and driving these things forward. So basically, it is not like means a 1 or 2 year kind of thing. These aerospace defense, it takes times to approval, basically. So once we are in line, almost after FY 27 and 28, we will be able to see a clear picture.
Okay. And sir, in H1 FY26, our volumes were close to 4,000 metric tons. So what are the volumes for the 9 months? What have we done for this quarter?
It was around 25% of the total capacity utilized, around 6,000 metric tons.
All right. And sir, can you explain a little bit more in detail as to what sort of capacity we are adding at the Dewas facility in terms of extrusion or anodizing or foundry?
Dewas, basically, we are adding tubing capacity there. So our initial draw bench machine is already there and trial runs are going on. The capacity, the raw material capacity which is required, basically extrusion thing, it just got delayed by almost 8 months by Koreans because there were some issues with the R&D kind of thing. So as of now, the existing capacity is around 900 metric tons per annum.
All right, sir. Understood. So, sir, these value-added capacities that we have in terms of foundry, anodizing, and machining, they are actually quite less compared to the extrusion capacity that we have of 24,000 metric tons. So, wouldn't they be a bottleneck towards adding margins ahead?
No, basically it won't be a bottleneck. Why? Because what we are trying very hard to execute, additional facilities in terms of value addition. So that I just explained that we have acquired 2 acres of facility in Pithampur so that the anodizing and our powder coating unit can be started very at a very fast paced manner, where our technical team is already traveling overseas, finalizing the machines and all. So it won't be a bottleneck. See, because this is not like a 1 year or kind of easily thing that we can execute overnight. So company has plans. We are trying very hard. So you will see the reflection maybe in coming half and 2 years basically.
All right, sir. Understood. That's all from my side for now. I'll fall back into queue for further questions. Thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We will take the next question from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
So thank you for the opportunity. Sir, I wanted to understand what is the realization per metric ton premium that we'll get on this anodizing and the powder coated extrusions. And sir, what is the margin, additional margin we can expect from this value-added products?
So just sorry, our chairman has arrived, so he will be, more interested in, answering these questions. So I'm just handing over the line to him. Just wait, please.
Shall we call?
Yes, yes.
Okay. इधर आ लो. नमस्कार सब इन्वेस्टर्स को. यस, बताएं क्या क्वेश्चन.
Yes, sir. Yes, नमस्ते सर. सर ये जानना था कि ये एनोडाइजिंग और पाउडर कोटिंग में हमें प्रीमियम कितना मिलेगा वर्सेस द नॉर्मल एक्सट्रूजन्स एंड व्हाट वुड बी द मार्जिन, एडिशनल मार्जिन वी कैन गेट ऑन दिस प्रोडक्ट?
We will get round about 15,000 rupees per ton to 20,000 rupees ton margin. Our facility is coming for 1,000 ton for anodizing and 10 to 12 rupees in powder coating.
Okay, so 15 to 20,000 for anodizing and 12,000 for powder coating.
Powder coating, yeah.
Okay. And sir, so when do we expect to actually ramp this up? Because we have increased our capacity to 24,000, and so what is the issue? Can't we just make commodity products right now and utilize our capacity till the time we get approvals from defense and aerospace that we are planning?
Right. First, I am telling you that अभी हमारे पास जो press Italian, from last month it will come 99% in running condition, 100%. Before that, there is a lot of teething problems. Italian will come and sort out our problem. Number one. Number two, our around about 500 to 600 tons order will be cancelled from US. When they told that we are charging 500% duty on India because of Russian oil. At that time, all orders are cancelled. Now, one of the directors is going yesterday to US to clear these all things to getting order. So that is why our last quarter is quietly, hampered. Number three, we have contract with Tata now. We have signed already. The samples for the big press is almost 50% booked. But the samples and everything for the machining and cutting, there are a lot of machines will come. So samples are ready under trial. I hope by this month or starting of the first week, we get the total order for the press. So we are tied up with the Tata for 500 tons per month. So 6,000 ton capacity will be booked by Tata. They have signed with us.
Right.
So domestic,
from when?
Sorry?
Sorry, sir, please go, sorry.
Sorry? Tell me again.
So when will this Tata contract start? When will we start supplying to them?
Already samples, one item samples are ready. Second is under trial. And again, they will go for testing in US. It took around about 1.5 months for testing in US. After that, they will give us the order. Contract is already signed.
Okay, got it.
For 500 tons.
Got it. And sir, on this Dewas facility, our realizations would be close to 10-11 lakhs per metric ton. So what is this product that we are making? And so like for a normal aluminium extrusions, our realizations are close to 3.5 lakhs. So what is it that we are making that we will be able to earn 10-11 lakhs per metric ton of realization on this product?
Yeah. So first of all, this project is delayed around about 8 to 9 months because of there are two parts of this project. One is finish, one is raw material. Now finish is ready. This is under trial. but for the raw material, Korean supplier will be delayed for approximately 8 to 9 months, which I am going next week to Korea to discuss with this. And when I get the raw material, then I am able to give the supplies to the customer. Before that, I can't give, because there is no kind of facility in India where we get this raw material. So this is something precision tube, which is using for the air conditioning condenser tubes. So this is a total import, 100% in India. This is the first substitute in India. So that project will be delayed around about 8 to 9 months because of raw material.
Got it. And sir, if you could just help us understand on this defense, aerospace and architectural, sir, have we got any customer approvals, or will be approvals will happen over the next few months and post that will start supplying to these customers?
No. There are two things. One is the vendor of the aerospace. They are already trial with us. We have already applied. There are a lot of compliance with the aerospace, lot of audits. They are going on. Still, there are some discrepancy in the audit. Now we have to clear. I think so within 2.5 months we will clear this all discrepancy with the aerospace. We are not much interested in architect. Our main focus is aerospace and defense. We are not much keen about the architect, because as the architect there is no margin.
Right. Sir, so what kind of EBITDA per ton can we expect from this aerospace segment?
It's around about, I can say around about 80 rupees per kg margins.
Okay.
And the aerospace consumption for in India is around about 2,500 tons per month. And we expect we can get around about 150 tons in our share, not more than that.
Got it. And sir, so if I look at our business from an overall basis, sir, what kind of volume do we expect for FY 26, 27 and 28, and what kind of EBITDA per ton can we expect on a conservative basis?
I can't say for this year, because this quarter is not good because of the cancellation of order from US. So this quarter is not good. And by the next year, क्या निकाला बेटा next year? क्या था? देखना था. 1 second.
It is around $450 per ton. $450 per ton.
$450 per ton. Hello?
Yes, sir.
Yeah, $450 per ton.
$450 per ton.
Total. For the Maan, whether it's a Dewas, whether it's a plant number 2 Pithampur or plant number 1, all total.
Right. And sir, what kind of volumes can we expect next year?
I think so we will have more than 18,000 tons.
Okay, 18,000 tons. Okay, sir. Sir, that was from my sir. Thank you so much and all the best.
Okay, thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We will take the next question from the line of Jigar Chani from Nuvama Wealth. Please go ahead.
Yeah, hi sir. Thanks for taking my question. My question was more on the business perspective. So normally, when we take a contract, is this contract, when you enter into a contract, are the margins decided on a per ton basis, percentage margin basis, and how do we hedge the aluminum price volatility overall in the business?
Okay. Now we are basically converters. We are converters. We take a prime metal and convert the metal.
Okay.
So we will fix the margin in conversion only. For example, for Tata, for example, we have started. We are charged around about 75 rupees per kg only for the conversion of the battery.
Okay.
And our cost is around about 45 rupees. So this is our margin. Rest, whatever the fabrication and other work done by for Tata, it is entirely value added. One part. Number two, the raw material 100% hedge.
Okay. And
100% hedge. It is back to back.
Okay. Okay. Understood. And this is
Whether on the MCX or on the LME, whatever the cheapest.
Understood, sir. And this is applicable for all contracts?
100%. Our total metal is hedged.
Okay. And sir, you were mentioning about this US order getting cancelled. Can you share the quantum that has impacted?
It's around about 450 tons.
And in revenue terms, it will be closer to what?
Because in this, there's a good revenue. Around about 200 tons is a fabrication. Fabrication is our really core and hard profit, very good profit in fabrication in US. So I can say we have lost around about 5 to 6 crore rupees.
Understood. And sir, on now post this US trade deal being announced, any leeway or on the ground improvement you are seeing on demand? Maybe these orders will come back sometime in Q4 or probably next year. Are you seeing some traction on the ground?
No, basically this aluminium is under Chapter 232. They have given only one relaxation right now, is only for automobile industry and aeroplane industry. They will not charge duty. For automobile, they will charge 18%, and for aeroplane, there is a zero duty for aluminum parts. And we are struggling for the solar also. And I hope we will get definitely a good results. As soon as solar will start, we will definitely get a very good order.
Right, sir. And just last question is on the capex. So if I see your PPT, you have announced close to 190 crores of capex.
Yeah.
Out of which majority, about 70 crores is going into Dewas. 21 crores, I think we are spending in FY26 under 50 crores over the next 2 years. So what kind of, so Dewas, I think Umesh sir already mentioned that you would see a peak turnover of 100 crores. What about the rest of the capex? How much asset turn can we expect out of this remaining 120 or 100 odd crores that you're going to spend across Pithampur and?
Okay. So plant number 3 is coming up with the 1,000 tons of capacity of anodizing and 1,000 tons of powder coating and construction. Plus, there is a huge shortage of the land at current plant. We are going to shift this fabrication unit on the floor of anodizing and powder coating in 2 acres. So there is a huge construction over there, and there is a huge construction is going on Dewas as well as in Maan also. So this is one construction part, and 2 plants are coming. One is anodizing, one is powder coating. And one new press with the induction, with the new technology, Korean technology, which is the raw material for this unit only. This is something big. So if I take a total and some round about 4 to 5 crore rupees is invested in Tata for the new machines, which they have given the contract for 2 years. They have given for 2 years. They are supplying to US, taking us and sending to US. And some more machines are coming up for the fabrication, like Vibra caustic. They are demanding some more automation. We are also working on those lines also. So these kind of the customers we are taking care, whatever the demand they have for the existing unit. So this is the total expansion, approximately 190 crore.
Right, sir. So I was asking how much turnover can we expect on peak utilization from this?
Next year, I can't say for the trading. Trading is an opportunity business. The last quarter is very low. I think so this quarter is going good. I hope so. So I can tell you 18,000. It's around about 500 crore for the manufacturing side by next year.
By next year. Okay. And on peak utilization, this can probably go up another 20-25%.
Sorry?
On peak utilization of your capacity, this will go up by another 20-25%?
Yes.
Okay. Okay, understood. Later, I will come back in the queue for further questions. Thank you.
Thank you.
Thank you. We have the next follow-up question from the line of Jatin Damania from Swan Investments. Please go ahead.
Thank you, sir, for the opportunity once again. So just wanted to understand that you indicated that due to the cancellation of the US contract, we lost near about 450 tons of volume in this quarter. But how shall we look at that particular contract? I mean, have we received or probably are we discussing with that particular customer for the renegotiation of the contract?
Yeah, already one of the director of PPJN is there just one day before, because they told us we have shifted the order to the local manufacturer. So I hope we will get something, not 100%. I hope within 2-3 days it is clear we'll get something.
And sir, if you, I mean, as you indicated that we have lost it to the local supplier. So if you want to look on the US perspective market, in terms of the pricing, what will be, how will be our pricing differ from the domestic supplier pricing in the US market?
I'm not able to understand.
So you indicated that we lost the customers due to the supply from the local market, right? So in terms of the pricing, how much would we be an expensive, or how much so the difference between our costing, our pricing and the local supplier pricing in the US market?
Local is higher, round about, I can say for the anodizing is around about $500 to $600 per ton. And for the extrusion is also 300 to 400 ton per ton. I'm talking about CIF cost. Yeah, but new one policy came in US. If you take this American product, you will get the subsidy of $300 per ton.
Right.
They have introduced new policy.
Okay. Okay, sir. That's all from my side. Thank you.
Yeah, thank you.
Thank you. A reminder to all, you may press star and 1 to ask a question. We will take the next follow-up question from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, thank you for the opportunity once again. Sir, I'm just a bit confused. Sir, we mentioned last quarter that our margins in extrusion would be 15 to 18%. But sir, when I look at even the like the most the premium anodizing where we are earning 15 to 20,000 EBITDA per metric ton, sir, our margins are hardly coming. It is less than 10% when I consider that 3.5 lakh realization per metric ton.
Yeah, you're right. Yeah, you're right. You see, which our orders cancelled, this is not only extrusion. It's extrusion, powder coating, then fabrication. We get the margin in extrusion, we get the margin in anodizing, then we get the margin in fabrication also. So that order is very important for us, where there is a big difference in this quarter. We have lost this big customer.
Sir, so what is the per metric ton EBITDA we can expect on the extrusion segment?
The extrusion, if I say total, mill finish, then anodizing, then powder coating. I can say around about 30,000 rupees per ton, approximately.
Okay,
After
30,000
extrusion and anodizing.
Okay. So, sir, only extrusion would be closer to 10,000 rupees per metric ton?
10 to 12,000 rupees.
Okay, 10 to 12,000 is only from extrusion and the rest is...
That's
Sir, still
why we are focusing for 1,000 ton anodizing and 1,000 ton per month powder coating, where we can get a value addition. And the customer is also very happy to take the material from us anodized. He will not send anywhere else. Today we don't have the capacity.
Right. But sir, still we will be earning only 10% EBITDA margins, if I consider that in 9 months we did 6,000 metric ton of volumes and we did close to 225 crore of revenue. Our margins would be less than 10%. So, is that, sorry, I'm not trying to understand where I'm getting it wrong.
What is the question? Just check.
Yeah, can you please repeat your question?
Yes, sir. Sir, last quarter, I was reading your con call. You mentioned that extrusion margins would be 15 to 18%.
Right.
Okay, right.
And sir, if I look at a realization of 3,50,000 per metric ton that we did during 9 months from the manufacturing segment, that number should be closer to 45,000-50,000. So I think I'm getting somewhere this good.
See, if that order that cancelled into last quarter, if that order would have been executed, then you could see that margins were at the same level.
Right.
Because what you are seeing, there is a mix of domestic and export market basically. So in export orders we have a considerably good margin.
Right. And sir, what kind of margins can we expect from the precision tubing at Dewas?
100 rupees per kg.
100 rupees per kg. Okay, sir. Sir, that was from my end. Sir, thank you so much and all the best.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. Thank you very much. Ladies and gentlemen, that was the last question for today. And with that concludes the question and answer session. I now hand the conference over to the management for the closing comments. Thank you and over to you, sir.
Thank you so much. So yeah, basically Maan Aluminium is in the middle of, to all the investors to just stay connected with us. We are into the middle of a strategic transformation from commodity extrusion to high value aluminium solutions, from trading-led volumes to manufacturing-led profitability, from basic profiles to aerospace, defense, automotive and precision applications. So FY26 while reflects transition costs, so we have set the platform for long-term growth is firmly in place. So that's all from our side. Thank you so much.
Thank you very much, sir. On behalf of Nuvama Wealth, that concludes this conference. Thank you all for joining us today, and you may now disconnect your lines.